I guess the core thesis that we had on Blackmores was around valuation, not how good the near-term set of results will be. We think they're going to have stunning growth in the near term. Our concern is what's the price for that growth? And so we went and had a look at what we think Blackmores needs to do over the next 6 years, and it's basically they need to grow their sales to around $3 billion. They need to maintain current margins. They need to do that in a way which involves no investment in working capital, no capex. They need to have a sustainable 100% return on equity into perpetuity, and they just basically have to have a nirvana of a business. And what the markets focus on is momentum in a stock like this. Yes, they are delivering absolutely fantastic quarterly earnings and sales results, but there's got to be a price for that. That's what we say. And in the case of Blackmores, on the day of their quarterly announcement, they also announced a very good infant formula deal with Bega, which we think has additional value, which we don't dismiss that, and we'll have to do some more work on that. That could be a very interesting component of their business going forward. But then in the following couple of hours after the market shut, China had introduced some new regulations about how health foods and infant formula can come into China, and we think there could just be a few sands in the wheel for people pushing their products into China as a China nutritional or infant formula play. Just the next 6 months could be a little unsettling, and if that just means that they don't quite hit the targets that the market's expecting from them, there could be a little bit of weakness there. Whether it's a fad or a fashion, we just look at the underlying competitive dynamics in these markets. Infant formula is a commodity. It is produced around the world in highly credible countries. Why has 18% of Chinese infant formula been able to be supplied from around the world? There is a supply response that will occur and that will happen. It just doesn't have to be organic. Markets are concerned about made in China products. There is a large supply chain outside of the world that will scale up to supply China, and that's got to be competitive. These little companies in Australia just aren't going to be left alone to enjoy non-competing markets. There will be, as we've seen, a big response. So short term, it's like iron ore. It's all great until supply then comes in, and we'll see what happens to volumes and prices when you get additional supply coming from credible alternative markets.